Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the weekend edition of the Bulletin Board Heroes here on Share Talk for Sunday, the 7th of February. Starting off with Conduit Capital, where we're still toying with the 200-day moving average, the 200-day line, the boundary between the bulls and the bears technically or chart-wise as well, and that's at 3.16. So really need a decent end-of-day close above that. We sort of got there on Wednesday, but not quite. So probably at this stage, if you're cautious on the stock, maybe just wait for a break of Thursday, Friday resistance around 3.3 pence on an end-of-day close. That should take the shares on their way up towards the top of the rising trend channel from October, currently promising a target as high as 5 pence, and that may be seen as soon as the end of next month. In terms of the stop loss, the initial January resistance around 2.4 pence, and that's probably the best place at the moment, and that's just below the 20-day line as well. Next up, a stock which has been requested by a couple of people, which is rather unusual given that it's pretty obscure. But Golden Rock Global, apparently it's a SPAC of some kind as well, so another reason for looking at it, as it's the year of the SPAC at the moment. The charting-wise, we've had a couple of developments which are positive. The first one is the break of the 200-day moving average at 6.83 pence, and so a decent weekly close above that, and also the break of an extended line of resistance from back in 2016. So that's a second plus point. The other point to note, I suppose, is the way that we had on Friday we had an intraday bounce off the 200-day line and then push back towards recent highs. All that's missing here probably just an end-of-day close or a weekly close above 10.5 pence at that late April 2020 resistance. But if you're a bull of the stock and a fan of it already, then really above the 200-day line, just shy of 7 pence, and we should head at least up towards the 2020 resistance line projection at 20 pence over the next few weeks. Big picture target, obviously, if we get through 20, is up to 30 pence, which is the resistance of 4 or 5 years ago. So looks like Golden Rock on its way, at least while it's above the 200-day line. A stock which seems to be rather reticent in terms of rising is Kibo, despite all the wonderful fundamentals or improving fundamentals on the shares. The big break here, I suppose, this month has been the clearance of that initial 2021 resistance at 0.3. That's the main 0.3, the main resistance on the chart near term. While we're above that, looking forward to a November price channel top at 0.5 pence. 3 to 6 month target here up to 0.8, which is the top of a broadening triangle from March last year. But really want to get through this, the 0.3s really want to get through that to show that the sellers are finally out, or the seller is finally out on that stock. A stock where one suspects there has been a seller in place is Mode Global, and we saw a brief rally here up to 75 pence at the beginning of last month. Shares then came back rather painfully to 40 pence. Looks as though, I mean, when you see something like that, it's normally just to ensure that any weak bulls of the stock or a market are flushed out of the situation. So that looks like what we've got here. And the weekly close above the late January resistance at 52 pence should be enough now to take the shares up towards a retest of last month's peak, and hopefully even an 80 to 85 pence target there, which is an October resistance line projection at the top of a broadening triangle from the start of Mode Global's history on the market. This stage would be very surprising, even if we don't break higher, for any sustained price action back below the 50-day moving average. We had good support there last week, and that looks as though that will defend the bulls on any weakness that we have in the meantime. But ideally there 52 holds, and we keep going higher after that. Apparently a stock which is in focus with the UK's version of Reddit is Metro Bank, and interesting here that actually we've already had a decent break up in the stock, a break higher in the stock. We had the that November bear trap just below 60 pence, and we progressed nicely since then within a rising trend channel from September. The overall pattern here, while we're above the floor of the channel from September at £1.20, we're looking towards the top of the channel at £1.80. In the near term, any weakness towards the 50-day moving average regarded as a buying opportunity, but really here, shares already well on their way within a recovery, and really while we're above 120 up to 180. So it'd be surprising if, with or without a concerted effort by the bulls, the shares get up to that 180 level anyway. Moving along to a stock which is less in focus, perhaps, which has been requested here, is mining, minerals and metals. Here we've got a rising trend channel from December based at 8 pence, and while we're above 8 pence, we're looking towards the top of the channel from December at 20 pence to be hit, hopefully as soon as the end of next month. If you're cautious on the shares, which you might be, the trigger for buying would be technical trigger for buying would be an end of day close through the initial February resistance at 11.25 pence. But with the both the 50 and 200-day moving averages rising now, it looks as though there should be enough momentum here to get that target by the end of next month. A stock which is relatively new to the market but already making an impression is Nightcap, with a great breakthrough resistance that we had for the end of the week. So 19.4, the late January peak, and above 19.4, looking towards 35 pence at the top of the broadening triangle from last month. Decent risk reward there. Ideally, there's no break back below the initial January peak at 15 pence. Above 15 pence, hopefully on to 35 pence for Nightcap. Seems to be quite a lot of enthusiasm surrounding Mega Diagnostics at the moment, although it has to be said the price action of late has not been that easy. We've had false breaks to the upside, several there actually since November, with the one sort of normally going towards the 70 pence area. But the last peak in January took us up towards 88 pence or just shy of that, and that's the target now while we hold above the 200-day moving average and that broken November resistance line at 62 pence. Nice outside day on Friday, so that was a decent end to the week, but probably if you're cautious, you want to see a clearance of 73 pence early this week in order to get our target through towards 90 and then up to the top of that November trend channel at £1. Big target here for fans of the stock, and I know there are many, would be up to £1.60 on a 2 to 3 month time frame, which is the top of a broadening April 2020 price channel. News possibly in line for Providence as well, according to newspaper reports, at least over the weekend. Here we've still got the situation that while we're above the 50-day moving average at 5 3/4 pence, we should be looking towards the top of that rising trend channel from back in February last year at 9 pence. So that would be hit, the 9 pence target, hopefully by the end of next month. If you're looking for a momentum trigger, then you'd wait for an end of day close through the 7 pence level. For fans of the stock, I suppose there could be a bit more on the upside if you're mindful of that particular resistance line there from April last year at 12 pence, but at the moment I'm just going for 9 pence, given that the price action recently has not been that stellar, let us say. Another request comes in the form of RUA Life Sciences. Here looks like we're in an ascending triangle based around the £1.45 level, but at least in the near term, while we're above £1.57 and the 50-day moving average, looking for further upside, hopefully as high as that June resistance line projection from last year at £3.10. If you're cautious, you wait for an end of day close through £1.80, which is the triple resistance that we've had since the beginning of December. But at least while we're above the 50-day line, looking for that £3 zone over the near term. Towards the end of last week, probably one of the biggest stocks in focus was the following one, Tower Resources. Nice close there with the close above recent intraday peaks at 0.5 pence, so that is a big plus, also breaking that October resistance line there at 0.45, and I think 0.45 really the level in question, as that's been the highest close that we've had of late. So above 0.45, looking for at least a retest of that spike from October at 0.65, and the big picture target here maybe over the next couple of months up to that January resistance line projection at a penny. So everything here really hinging on 0.45 holding, and above that looking towards a penny for Tower Resources. Finishing off with a stock which has just kept going back and back and back, or down and down and down from the peaks that we had last summer, but it looks as though the shares have finally found their floor. That's said on the basis that on the way, or prior to the rally that we had last summer, or going into last summer, 4 pence was the resistance. Previous to that, 4 pence was support. So we bounced off that area, and above 4 pence, really looking for recovery here. Initial target there last month's peak through 8 pence, and the big target here on the next 2 to 3 months up to 11 or 12 pence for the shares. If you're looking for a momentum trigger, then a break of that resistance line from December at around 6 pence would be the level in question, especially after the latest bullish divergence that we've had in the RSI window. That's it for me today. More updates during the week.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.